Hello and welcome to ET Now. I'm Ashwin Mohan and you're watching Amicus Curiae, your weekly guide through the corridors of corporate law and tax, regulatory affairs and mergers and acquisitions. And this week, we take a closer look at the ongoing boardroom tussle between Vijay Mallya and the new owner of United Spirits, global liquor giant Diageo. But before we slip into that discussion, let's take a quick look at the headlines. 5 foreign portfolio investors filed writ petitions at the Bombay High Court challenging the levy of minimum alternate tax by the government. The amended finance bill states that all capital gains from sale of securities as well as royalties and technical service fees earned by foreign companies will be exempt from MAT if the normal tax rate on such income is lower than 18.5%. The RBI has penalized Bank of Maharashtra, Dena Bank and Oriental Bank of Commerce for violating Know Your Customer and anti-money laundering norms. UK Sina says the regulator will take a call on the listing of BSE in 6 months after resolving issues on the SEBI FMC merger. The Delhi High Court asked the Competition Commission of India to consider afresh Google's plea against an earlier order alleging abuse of dominant position in the online search advertising space. Alleging fund diversion to Kingfisher and other UB Group entities, the new owner of United Spirits, Diageo, has asked troubled tycoon Vijay Mallya to step down as chairman and director of the Indian liquor firm. Diageo, which has brought a controlling stake in United Spirits from UB Group, asked Mr. Mallya to resign after an inquiry by PricewaterhouseCoopers alleged improprieties and violations. Mr. Mallya has refused to quit and claims the allegations are false and unjustified. The board, of course, now has the option of recommending his removal to the shareholders of the company. With both sides defiant, the stage is set for one of the most high-profile and bitter slugfests in the history of India Inc. So at Amicus Curiae this week, we ask, what are the key takeaways for corporates and overseas acquirers from this dramatic boardroom tussle? And to discuss that and much more, we are joined by Sharad Abhyankar, corporate partner at law firm Khaitan & Co. and Mr. J. Gupta, former ED SEBI, and he also heads the corporate governance advisory firm Stakeholders Empowerment Services. Gentlemen, thank you so much for taking our time and joining us on Amicus Curiae. Mr. Abhyankar, let's start off today's discussion with you. Sure. As far as this entire ongoing boardroom tussle is concerned, it's quite bitter, perhaps unprecedented in recent times. What kind of an impact do you think it will have on overseas investor sentiment? Because this is something clearly that India Inc. would want to avoid.
Well, it will entirely depend on the quality of due diligence that Indian corporates are able to offer. Just one instance of this magnitude may not necessarily have any significant impact on the Indian industry as a whole. But yes, investors will be definitely far more cautious. They will dig deeper into the Indian companies and their conduct.
All right. Mr. Gupta, what kind of an impact do you think it will have? Because a lot of foreign acquirers are looking at India in a bigger way than ever before.
I would say that the impact will be dependent upon what is the outcome of this case. If it is indeed proved that there is a fraud, then the impact would be that people will be very cautious in due diligence and probably due diligence level will be better. Okay. However, if there is a fraud and no action is taken, then probably it will dent the confidence of the investors.
Clearly, the consensus seems to be that there will be no immediate impact, at least till the case is fully resolved. Sharad, tell us about the impact that this kind of a tussle, a boardroom tussle, can have on the M&A climate. Because when the deal was sealed between USL and Diageo, it was one of the most game-changing deals ever in the history of the Indian liquor industry. What kind of an impact do you think it will have on the entire deal scenario in India?
The prevention of insider trading regulations, the new regulations will kick in on 15th of May, which make both the disclosure and use of unpublished price sensitive information a crime. Now that will definitely have a certain impact on how due diligence will be conducted. The onus has been put on the board of the target companies to decide whether offering such a due diligence is in the benefit of the company. So a lot of responsibility on the target boards to even first decide whether such a due diligence should be offered or not offered. once it is offered, of course, then it is subjected to confidentiality and so on.
So clearly that is going to change the rules of the game altogether once that kicks in.
Completely. And obviously, the investors will look for as much unpublished price sensitive information as is required to satisfy them that there is nothing untoward that will come out after the transaction is closed.
Mr. Gupta, what kind of an impact do you think Sharad's reference to that new law kicking in on insider trading regulations will have?
I will divide the thing into two. One, it is correct that insider trading regulations, new regulations have come in and they will impact it. But the regulations permit that due diligence should be done, but the report should be released to the investors also. So that is one aspect of it. Second aspect of it is that the whole problem of the board level has arisen out of a contract between Mr. Mallya and Diageo, where Diageo has agreed to vote for Mr. Mallya till such time Mr. Mallya holds 1% share.
Absolutely.
And now this is where the impact will be felt most. Now such contracts will be very carefully drafted so as to avoid ugly situations like this, because we are not aware what is there in the contract. As a governance people, we feel that these contracts are not good because this puts Mr. Mallya in a position of a super shareholder. 1% shareholder is bigger than the 99% shareholder. One. Secondly, the takeover code, it's very clearly says that the person, the controlling shareholder who is selling off should get the same price as the public shareholder is given. Now, in our opinion, a share has two rights. One is economic right, other is political rights. Now, Mr. Mallya has given up only the economic rights, whereas the political rights in the form of voting, which Diageo holds, is still with Mr. Mallya indirectly, where the public shareholder got the same money and they have given up both the rights. So, indirectly, Mr. Mallya has his rights and much more than, because he was earlier holding only 30% share. Now, 57% votes are with Mr. Mallya. So, that is something we have to look at, regulators have to look at, as well as those people who are doing M&A have to say that what type of the contract should be done, so that in such situation they can wriggle out of the contract. Because if you see the press release, they have, USL board has advised Diageo to look into possibility of getting out of the contract and voting against Mr. Mallya. So this situation would not have arisen if such things would have built into the contract.
Sharad, Mr. Gupta brings forward a very interesting real-life practical scenario which perhaps could impact future deals. What are the safeguards do you think acquirers as well as investors could in fact include in contracts to avoid the situation that Mr. Gupta is referring to?
So I think giving disproportionate rights to any minority shareholder retaining the stake would clearly be quite uncalled for. Yes, I would agree with Mr. Gupta that there is clearly an imbalance of consideration between public shareholders or retail shareholders who were paid the same financial consideration but not the same board rights. Let's try and flesh out the corporate governance perspective as far as this entire tussle is concerned. Now, I've spoken to a few corporate governance experts and Mr. Gupta, they tell me that Mr. Mallya, more than anything else, has a fiduciary responsibility as a director to his shareholders. And therefore, they seem to suggest that he should step down till the time this entire allegation of financial irregularity and of course him being declared as a willful defaulter, till all this is buried. Till that time, he should step down and maybe if his name is cleared, then he can resurface. What's your perspective on this aspect?
I would not say fiduciary, I would say it is a moral. The moment Mr. Mallya has been under cloud for whether being tagged as a willful defaulter or being a party to this improper and illegal transaction as the report suggests, then to clear his name, it will be better that he steps down.
Sharad, you closely track the Companies Act. What do you have to say about the accountability of directors when you look at this as a case study?
I would believe in Marcus, the Greek philosopher and a king, who said, don't say it if it is not true, don't do it if it is not right. So I think that fundamental principle we keep on probably forgetting very often. I would actually really support Mr. Gupta that ultimately the ethical standard is very personalized. So Dr. Mallya may have his own reasons not to step down. However, yes, in all fairness, it would have been better had he stepped aside, not necessarily resigned, but at least stayed away from the company for some time.
All right, so the consensus from our panel seems to be that Dr. Mallya could have perhaps stepped aside and not necessarily resigned. But on that note, we'll have to slip into a short break on Amicus Curiae. We'll discuss other aspects relating to this ongoing boardroom tussle. On the other side, keep watching ET Now. Welcome back to Amicus Curiae. Mr. Gupta, now let's talk about the role of independent directors as far as this ongoing boardroom tussle is concerned. How do you read their role?
You cannot, by law, bring ethics into conduct of a person.
Absolutely. That's something you can't enforce.
You can. And whatever the law has been trying, it is failing to bring home the fact that independent directors owe a duty to the shareholders, because they are the people who are going to protect that. And I see that they have failed their shareholders miserably. I will give you examples as far as the USL is concerned. In USL, for last 6 or 7 years, the board report, the annual report has been writing that White and Mackey has been performing well. And when they sold White and Mackey, they said that they have sold it at a 50% higher EBITDA margin at which it was multiple as it was purchased. Right. So normally it should make profit. But then they say that we have to write off 4,200 odd crores. Why? Because profitability of White and Mackey has been impacted.
All right.
Now, I can't reconcile. On one hand, the annual report writes that White and Mackey has been performing well. At the end of 6 year or 7 year, you say that EBITDA margins have come down. So, which is the right thing? And for 6 and 7 years, this has been written in the annual report.
All right. So, Mr. Gupta clearly has strong opinions on the role of the directors. Sharad, would you like to add something to this?
I think to be a little more fair to the independent directors that came in after the acquisition, all these transactions are anyway relating to a period much before.
Okay.
So I think to put the onus on the current board will not be really in good spirit. Having said that, how the then directors considered these transactions, whether they were considered in the interest of the company, in the interest of the stakeholders. So we did not need a company like 2013 to really have the same level of responsibility when the transactions are approved. There are clearly transactions now identified, which are loan transactions, where the terms and conditions, the auditors have very specifically remarked that the terms are prejudicial to the company's interest.
That's right.
Now that may bring the responsibility of the then directors clearly in sight, and there will be certainly there may be a scrutiny as to what was their role responsibility when these transactions actually were undertaken.
Sharad, I want to quickly look at the role of the auditors. Now, according to a report by Institutional Investor Advisory Services, the concerned auditors in this case must be asked to justify their audit quality. That's what the report says. Now, the report also questions, should shareholders rely on PwC's statutory audit or PwC's forensic audit? Now, we have tried to get in touch with PwC, and PwC UK says that both these assignments were carried out by completely separate teams and they were independent and separate from each other. What is your stance on the accountability of auditors over here?
Auditors will largely depend on what is disclosed to them, and really it's the same standard again for a due diligence quality. What will come out of due diligence will depend on what is really disclosed during due diligence. The same standard will apply also for an audit process. So while they may have asked relevant questions, whether they had enough information, we do not know. And really speaking, it will be somewhat premature or inappropriate for me to comment without knowing what process was followed and what information was really available to them.
All right. Mr. Gupta, would you like to add to that on the role of the auditors?
I would like to add that we cannot judge the quality of audit by the firm's name alone, because firm consists of individuals who could be different in their capability, seniority and capability. And by just saying that PwC is the auditor for both the things, for the forensic audit as well as the statutory audit, to me, when you see the report and when you see the fact, you may reject both the reports or you may accept both the reports. It depends upon what was the disclosure and what is the quality of audit. So just by brushing, saying that both are coming from the same company, it is a little bit harsh on them.
Will this entire case perhaps have an impact on how contracts are drafted going ahead?
If you look at the contract and contract alone, Mallya is an upper hand because Diageo has to play ball according to Mr. Mallya's instruction. However, if there are any terms in the contract which say that in case a fraud is established, in case something is established which is contrary to what is expected from Mr. Mallya, then probably Diageo can renege on the contract. However, I feel that if this matter goes to court, to justice, then the judges will also look into the public interest aspect.
Sharad, there's also the aspect of perhaps the company referring this entire issue to the shareholders and asking them to take a call. In that sense, how do you see the situation panning out?
If the shareholders are made to decide, I do not know what will be the adequacy of information because the agreements are between shareholders. I do not know as a target company whether they will be entitled, number one. Number two, whether they will be able to enforce the disclosure of agreements between Diageo and Dr. Mallya to the shareholders of the company.
All right, so clearly there are a lot of pros and cons even when it comes to referring this entire boardroom tussle to the shareholders. On that note, let's slip into a short break. We'll discuss closing comments on the other side of Amicus Curiae and also the regulatory aspects plus the troubled legal roadmap ahead. Welcome back to Amicus Curiae, where we're going to take closing comments from our panel, Mr. Gupta and Sharad Abhyankar from Khaitan and Co. Sharad, as far as regulatory intervention is concerned, I know we do not have too much material which is available in the public, but based on the publicly available information, which are the kind of regulators do you think would be attracted to intervene in this case?
In terms of corporate law, I think both SEBI and Ministry of Corporate Affairs would possibly be interested in looking at the things right now, particularly given the publicity that this matter has been getting. The volume of write-off is significant. The companies have been in the news for quite some time. The qualified auditor's report is also a good ground for any regulator to step in. I'm sure SEBI has already commenced that process through the review of the audit report itself. So there is no reason why any regulator would not already start looking at this.
Mr. Gupta, you've been a former ED at the market regulator SEBI. Do you expect any suo motu action in the absence of anybody officially approaching the regulators?
See, there is nothing in the law which stops any of the regulator to take a suo motu action.
Right.
Secondly, if you see the press release from the company, they have very clearly drafted the press release and said that they have referred the matter to the auditor. Now, the auditor, as per the Companies Act 2013, is duty bound to report a fraud to the Ministry of Corporate Affairs and SFIO. So, they have ensured that this will be reported to MCA. Given the volume or the amount involved, given the issues involved, and given the sentiments of the market hovering around this case, my hope is this, that both the regulators will take a suo motu action and initiate investigation and inquiry into the matter so as to close the matter either way as soon as possible.
Sharad, do you expect protracted litigation in this case? Because both the parties seem quite defined, both sides are not willing to give up. And if at all there is litigation, what are the kind of legal forums that they can approach?
Surely CLB will be the court of first instance if there is any issue on right to a director's post. It could be CLB, it could be High Court, but I think none of the parties will be happy to stay there and will ultimately move to the apex court for a final resolution.
We'll move on to the last question of today's panel, and that's perhaps the most important question. What are the key takeaways for India Inc. from this ongoing boardroom tussle, which is definitely going to be quite a long one? Sharad, top 3 takeaways, quick answer.
The boards, particularly the independent directors, will have to come up with a clear conflict policy which would be possibly the top priority item for independent directors to now consider and document and make that document publicly available, to disclose what is the conflict policy and how the board is going to deal with situations where individual directors are going to be conflicted in any of the transactions. Number two, the quality and the degree of due diligence is going to be definitely much higher. There could be due diligence far beyond merely the target company. It could be on the shareholders rather than the target company. So the due diligence will definitely go far beyond just the company that you are going to acquire. It could be the conduct of the shareholders, it could be the track record of transactions between the target company and the shareholders or controlling stakeholders. There could be a larger debate also on what related party transactions are in the best interest of the company. So just because there are RPTs, it does not mean that all RPTs are necessarily bad, but the boards will have to debate how these transactions are justified.
The accountability of boardrooms is definitely going to go up, especially after this bitter tussle came out in the open. Mr. Gupta, your top 3 lessons for corporates from this ongoing tussle?
I would want that independent directors to play their role as is envisaged in the Act, in the listing agreement, and the day they start playing their role really independently, I can assure or I feel that such instances will be reduced to minimal, and that will be the day the confidence of investors will be there in the market, and probably many other things will disappear.
All right, on that note, we have come to the end of this discussion on Amicus Curiae. Let me thank both our guests, Sharad Abhyankar and Mr. Jain Gupta, for taking out time and joining us this week on Amicus Curiae. Thank you both.
Thank you.
Now it's time for the big shift, where we get you key people movements and developments across the advisory world, the judiciary and the government. According to legallyindia.com, Mohit Mathur, KK Manan, Rekha Palli, Balbir Singh, Mukul Talwar and Vivek Sood have all been designated senior counsel by the Delhi High Court. And with that, we've come to the end of the show. Thank you so much for tuning in. This is Ashwin Mohan signing off. Stay tuned to ET Now for more news and updates, and see you next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.